When starting real estate investment in Japan, one of the biggest questions many investors face is simple. Should you invest in urban properties or rural properties? Urban areas are often seen as safer and more stable. Rural areas are often associated with higher yields and lower prices. But relying only on those assumptions can be dangerous. Successful real estate investing is not determined by surface yield alone. The true success of an investment depends on multiple factors: rental demand, vacancy risk, asset value, loan accessibility, exit strategy. Today, we'll break down the advantages and disadvantages of both urban and rural real estate investment in Japan, so you can better understand which approach may fit your goals. First, many beginner investors make the mistake of focusing only on high yield. For example, a rural property showing a 10% yield may seem extremely attractive. But what happens if that property remains vacant for months? Your rental income drops, your loan payments continue, maintenance costs remain. Suddenly, that high-yield property may become financially stressful. On the other hand, urban properties may only offer 4 or 5% surface yields. At first glance, this appears weaker. However, urban investments often benefit from stable rental demand, stronger resale markets, better long-term asset preservation, more financing options. This means lower yield can sometimes produce more reliable, long-term performance. Now let's look at urban real estate first. The biggest advantage of urban investment is stable rental demand. Major cities such as Tokyo, Osaka, Nagoya, and Fukuoka continue to attract single professionals, families, students, foreign residents. This creates broader tenant demand and generally lowers vacancy risk. Urban properties also tend to maintain stronger asset value over time. Because land in major cities remains desirable, resale opportunities are often better compared to declining regional markets. Another major benefit is financing. Lenders often view urban properties as lower risk collateral, which may lead to higher loan approval rates, lower interest rates, longer repayment periods. This financing advantage can significantly improve investment flexibility. However, urban investment also has disadvantages. The primary challenge is higher purchase prices. Urban properties usually require larger down payments, higher closing costs, bigger mortgages. For beginner investors, this creates a higher barrier to entry. In addition, because prices are higher, surface yields tend to be lower. This means investors may sacrifice cash flow for stability. Now let's examine rural real estate. The biggest attraction of rural property is affordability. Lower purchase prices allow investors to enter the market with less capital. This can be appealing for beginners or smaller investors. Rural properties may also show stronger surface yields due to lower acquisition costs. For example, lower-priced buildings can produce higher rental income percentages compared to purchase price, but this comes with greater risk. Many rural regions in Japan face population decline, aging demographics, lower tenant demand, longer vacancy periods. This means filling empty units may become significantly harder. Once vacancies increase, expected cash flow can collapse quickly. Asset value is another concern. Unlike major urban centers, rural properties often experience faster depreciation and weaker resale demand. In some cases, investors may struggle to sell at all. This creates serious exit risk. Financing may also be more limited. Lenders may apply stricter evaluations to rural properties due to lower collateral confidence. As a result, investors may face lower approved loan amounts, higher personal capital requirements, fewer financing institutions. This can make expansion more difficult. So which option is easier for beginners? If your priority is long-term stability, urban investing is generally safer. It offers stronger tenant demand, better financing conditions, higher liquidity, more stable asset value, but it requires more capital. If your priority is lower entry cost and potentially higher cash flow, rural investment may offer opportunities. However, it requires much deeper analysis of Population trends, rental demand, maintenance costs, exit possibilities. Ultimately, the best investment choice depends on your budget, your financing strength, your risk tolerance, your long-term strategy. There is no universal best market. Urban properties prioritize stability. Rural properties prioritize affordability and higher potential returns. The key is understanding that high yield alone does not guarantee success. Smart investors evaluate the full picture: yield, vacancy risk, asset value, loan terms, future resale potential. Before buying any property in Japan, always look beyond the advertised numbers. Because in real estate investing, what looks profitable today may become risky tomorrow.